Hey guys, this is Vic from Grasping the Market and welcome to our market briefing. The June's bar confirms that the market is in long-term balance with now the ranges overlapping since March. On the weekly time frame, we had an inside bar for the week, which also confirms that the intermediate term balance is happening above 2900. Is this region that we see over here. Uh, we remember that we had a one-time framing up for the last 3 weeks, and this is the first time that we stopped taking the previous week high with an inside bar, which is a good indication that we are accepting the area above 2900. On the daily, on Friday we broke the immediate short-term 2-day balance range with a move to the upside. Apparently, the market was betting on a positive outcome from the G20 meeting and Mr. Trump's meeting with the Chinese counterpart. So we effectively broke out of the 2-day balance range and rotated back towards the all-time high. Zooming into the market profile, we can see now how despite the closing the opening gap on Friday, we have over here was about 5 handles or so, there was no continuation inside Thursday. And we tweeted about this because it was evident that they couldn't get through and they probably were getting too short here. So we tweeted that there was a possibility of a rotation back up, which is exactly what happened. So there was no continuation, and we went up, we established value higher, and then towards the session end, we had a late spike ahead of the weekend. As we said, probably the market was betting on a positive outcome, and there were also external factors that I will mention in a second. So the market is clearly driven by short-term money and momentous traders. The reason I say this is because of the amount of weak and poor lows seen from the bottom of the market, and you can see very clearly a weak structure. We have weak structure here. We had it before the break on the KL, then the previous day the MN periods, and then at the bottom of the range there is an incomplete auction with a poor low. And also keep in mind the proximity to the key 29.15.25 level from that day, which is the post FOMC low. So we carry forward that information, but that increases the odds that any rejection of Friday's late move could see this weak low in play, because if we start coming down, it could accelerate and take all these poor lows in one go. Remember, although the volume on the spike that we saw here was important, was a high volume recorded, remember that you had external factors like the month end and quarter end at the same time. So there was a lot of adjusting in positions happening. So do not get ahead of yourself and think, oh, there was volume, is going up, the outcome was positive, let's just go. We need to see what the market will do with that move. Is it will be validated or not. So the immediate focus for the week is on value development relative to the late spike. Obviously, if we get acceptance within, we're validating that move, and the most positive scenario will be acceptance above. And if we get that acceptance above, that will bring the 29.60 to all-time highs area into play. However, on the other hand, if we get acceptance below the late move, which is below this 29.44.75 area, that will confirm a rejection of the move and bring into play the weak structure. And that will, as I said, that increase odds that if you start getting towards this area and lower, that will bring into play probably last week's low. Another important thing to remember is that on Friday, it's the first week of the month, we have a holiday in the middle of the week, but on Friday we have non-farm payrolls, and that will have extra scrutiny because of the market expectations of what the Fed is going to do in the next meeting, which is this month.